Okay, so please, when you come in, mute yourself so that we do not have sound from your background. When you come in, please mute yourself. When you come in, please mute yourself, guys. Okay. I see people, Nelson who just came in, so I see people popping in. So let's get started immediately. Fine. Right. So this class tonight is going to be quite interesting, but it may not be very long. Right. So I'm going to be showing you guys on analysis how you can use Fibonacci to get sweet entries, right? Entries that you can bank on. Entries that when you enter, you know this is where to enter, this is where to buy, this is where to sell, right? So that's what we're going to be doing on this call. First and foremost, let me quickly do this. So first thing, number one, you want to see an impulse movement. I will explain this, just give me a moment. Number one, you want to see an impulse movement. Okay, so first of all, the purpose of this class, guys, is to show you how to get very good, excellent entries on your trades. Excellent entries on your trade. Entries that when you get, you can relax and you know that you're going to get maybe 80, 100 and something pips move. And then that's it. And you get it at the right point. You enter at the right point, right? You enter at the right point. So we're going to discuss briefly. Now, some of you already understand a little bit about Fibonacci. I will not go into teaching the whole Fibonacci now. I already did a Fibonacci class. I just want to show you guys on this call how to use Fibonacci to get your excellent entries, right? So, but I will share the basics of Fibonacci that you need to know, right? That you need for this class. I'm not teaching the whole thing, but I'm going to show you exactly how you can use this. So first and foremost, guys, the first thing you want to see an impulse move. You want to see an impulse move. Now, an impulse move is a huge movement in a particular direction. An impulse move is a huge movement in a particular direction, like a massive movement in a particular direction. It can happen maybe during news. It can happen during the news. It may also not happen during news, right? So I will show you what an impulse movement looks like. So number one, you want to see an impulse movement, right? So number two, you want to pull out your Fibonacci, and then you want to concentrate on the 50%, 50%, and 61%, 61.8% Fibonacci. Okay, now if you don't understand that very carefully, I will explain a little bit about it. Okay, number one, you want to see an impulse move in a particular direction. Number two, you want to focus on the 50 and the 61.8 Fibonacci, right? So that's what we're going to do on this call. Then number three, take note of any patterns that may be showing up in the market. Any patterns, and by patterns, I mean W pattern, M pattern, head and shoulder pattern, H and S pattern, right? So inverse head and shoulder pattern, right? So now, if you don't know many of these things, it's not a problem. Some of them we have done in a class, some of them we'll do again, right? But just understand that this class specifically is designed to help you to get your best entries. Okay. Now, if you don't understand everything, you probably take out the part, take them apart separately. Okay, later on. But this is what you want to look at. Number one, you want to notice an impulse move. An impulse move. Number two, you are looking for Fibonacci. You pull out your Fibonacci and you're focusing on the 50 and the 61.8. Number three, you take note of any patterns that may be forming in the market. any patterns. And by patterns, I'm talking about W pattern. I'm talking about M pattern. I'm talking about head and shoulder pattern. And then when you talk about W pattern, you are also talking of double bottom. When you talk about the W pattern, you are also looking for a double bottom. When you talk about an M pattern, you are also looking for a double top. Okay, then head and shoulder is another kind of pattern. And then there's inverse head and shoulder as well. Okay, so these are the three things we are going to be looking at for here. And I want to show you how you can use it in your trading. First of all, let's get into the chart. Let's look at this. I'm going to use 3 different charts to show you what I want to show you on this call, right? So the first thing you want to see is an impulse move, right? That's what we said. The first thing you want to see is an impulse move. So now in an impulse move, you want to see a huge candle in a particular direction or a huge move in a particular direction. Sometimes it's not just with a single candle. Sometimes it's not a single candle. Sometimes it's a single candle. Okay, now look at what I call an impulse. This, for example, is what I call an impulse. Can you see this? This is what I call an impulse move. That's what you call an impulse move. You see how massive it is? Yes, that's what you call an impulse move. Okay, nice. Let me show you another impulse move now. So this also is an impulse move. Look at it. It just keeps going in one direction and is massive. It is not a single candle from what you can see. From what you can see, it's not a single candle. Okay, it's not a single candle. The first one I showed, which is this one is a single candle. Okay, so what I'm trying to show you is that when you're looking for an impulse move, it could be a single candle that is massive like that, or it could be a series of candles moving in a particular direction. A series of candles moving in a particular direction, right? So now when you look at this move right here, let's do something. Let's do something. When you take a trend line and you draw a trend line like this, I'm sorry. So when you take a trend line, you draw a trend line like this, you will see how it keeps going. You see how it keeps going? Yes. So, and if you take another trend line, you draw it behind it, it's the same thing you will see. You see that, right? You see that. Okay. So you see that this is what you call an impulse move. This one is an impulse move, but it has only 3 candles in it. This one is also an impulse move, but it has more than 3 candles in it. It has a lot of candles in it, but it continues in a particular direction without changing its there's no change in direction significantly. It just continues like that until you see a change. You see, this is where the change starts to happen. This is where the change starts to happen. Can you see that? That's where the change begins to happen. Before then, it just stayed. You can see how it stayed under the trend line, trades in the trend line. I just kept going up, 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 up. This is Euro USD, guys. They just kept going up until a change in direction happens. That's the first thing you want to do. Okay, that's the first thing you want to do. You want to look for an impulse move like this. By the time you found an impulse move, then look at the bottom of that impulse move. Take the bottom of that impulse move, take the top of that impulse move. What did I say? I said take out your Fibonacci and focus on the 50 and the 61.8. The 50 is a resistance or a support. Okay, this Fibonacci, the 61.8 is another resistance or support. They are all embedded within the Fibonacci, and is a very reliable, Fibonacci is a very reliable tool that can help you with your analysis, that can help you with your support and resistance. Very reliable. Okay, so that's what we're going to do. So we said, number 1, find an impulse move. So you get an impulse move, right? The next thing, you pick out your Fibonacci and you are focusing on the 50% and the 61.8. All right. So now what we do now is we pick out this bottom, the bottom of the move and the top of the move. If it was this one we're targeting now, we're going to target this top, and target this bottom. So we have this top, we have this bottom. Since we are looking at this one, we have this bottom, we have this top. Okay. So now, if you are picking Fibonacci and price is buying, it's in an uptrend. So the impulse move is in the buy side. It's on the buy side. You pick your Fibonacci. Now let's go pick Fibonacci now. So let's pick Fibonacci. This is my Fibonacci here. This is my Fibonacci 2. So you can always find Fibonacci inside here. Long short position. Where do we find Fibonacci there? Okay, I think it should be here. You see Fibonacci retracement. So you're looking for Fibonacci retracement. Someone asked me the other day whether I was dealing with Fibonacci extension or retracement. I said I was dealing with retracement because retracement is what helps you for entries. Retracement is what helps you for your entries, and entries are the most important when it comes to trading, right? Yes, you can look for exit. Oh, where do I exit? Where you exit is really up to you. But entries is the number one thing. If you don't enter the market, you are not in the market. Where after you've entered the market, where you exit is up to you. You can decide to take a huge move, 100 pips. You can decide to take 50 pips. You can decide to take 20 or 30 pips. But already, at that point, you are already in the trade. Okay, that's why for me, entries are the most important, right? Rather than exit. Exits are things that they're arbitrary. You can take your we can both enter a trade at the same time. I would take exit at 50 pips. You take your exit at 100. It depends on each one of us. It depends on how much we can hold the trade. It depends on our appetite to hold trades. Okay, so but for both of us, we still need to get the best entry possible. And that's what we're talking about here. So you look for Fibonacci retracement. Now, if you're doing this on MetaTrader, this is Vantage MetaTrader. This is MT4. This is Fibonacci here. Look at it here. Fibonacci, draw Fibonacci retracement. So Fibonacci retracement is something you can find whether you are trading directly from the MT4 or you are doing it from TradingView. Is the same thing, the exact same thing. Is the exact same thing, right? So that's it. So let's go there now. So we'll pick the Fibonacci now. Once we click on the Fibonacci, first of all, before I draw it, I want to show you guys something. Look at the Fibonacci now. This is the Fibonacci 2, okay? Now on the Fibonacci 2, you are seeing 3 different lines right now. Actually, it could be 2. In fact, probably I should even edit it and remove the third one because we are focusing on the 50. 50 is the 0.5. The 61.8 is the 0.618. It's just like multiplying them by 100, right? So 50%, when you with percent, remember in maths, for those who did maths, when you say percent, you multiply by 100, right? So when you say 50, in this case now, in this case, when you multiply 0.5 by 100, it gives you 50. 0.5 by 100 gives you 50. That's why they call it 50%, right? Now, 0.618, if you multiply it by 100, it gives you 61.8%, right? So that's where it is. That's what it is. So don't be confused by 0.5. 0.5 is the same thing as the 50%. It's just telling you that that's 50% of the move. Okay, so when you find an impulse move like this, there is a point that is the 50% move. What that is telling you is that that's the middle of the move, the middle of the move. So when I take a Fibonacci now, I place it here and I drag it to that top, the middle of that move is the 50%. So the 61.8 is like 2/3 of the move. That's the 61.8. Okay, so now let's edit this Fibonacci. This Fibonacci has other things. When it comes by default, it has several other things that are attached to it. You know, there's the 31.32.1, there's 23 and all that. The reason I remove those ones is because they are not relevant. They are not relevant to me. I'm focusing only on the 50% and the 61.8. Those are the only 2 lines that are necessary, that are important for me here. In fact, the 0.78, which is the 78.6, I want to remove it now so that you see how I did it, right? I want to remove it now. So let's look at it. Once I click on this, look at the edit tool here, edit here. I click on settings, that's settings. So when I click on settings, I go to style. Style, you see that 0.5% is selected. I'll show you how to do this on MT4 too. So 0.5% is selected, 0.618 is selected, 0.786 is also selected. So what I do is I unselect, I deselect 0.786 and I click OK. So you can see now I have just 2 lines left. Now you can do this for whatever. If you are new to this on TradingView and you click on it, you will see several other things, 23.8 or up and down, everything. There are many there, right? All you need to do is just remove, deselect all of them and leave only 0.5 and 0.618 there. Leave 0.5, 0.618, 100 and 0. Those are the only four parameters you need to leave. 0 here, you can see 0 here on top here. There's 0, there's 0.5, there's 0.618, then there's 1. Now on MT4, you may see that as 0 and 100. It doesn't matter what it is, right? The reason why you are seeing it as 1 is because we are dealing with decimals here. So if this was 50% now, 50, and this is 61.8, you will see this one will be 100. I think for MT4 is like that, right? Let's do MT4. I want to show you guys this too. So when you come to MT4 here, let me do this. Okay, so this is Fibonacci, and you can see all the different numbers on it. Look at it, different numbers on it, right? Look at all the different numbers on it. What we are going to do now, we're going to edit this Fibonacci now and remove all the numbers, and we'll be left with only 61.8 and 50. So you can see here now, instead of 0.618, we're having 61.8. Okay, and then instead of 0.5, which we are seeing on TradingView, we are seeing 50.0 here. So it's the same thing. Don't get confused with 0.5 and 50 or 61.8 and 0.618. They are the same. Okay, so you can see what it is on MT4. So let's edit it. Let me show you guys how to edit this. So we'll go to Fibonacci 2 and edit. Okay, let's go to Fib levels. So what we are going to do on Fib levels is we are going to delete some things. We'll delete 23.6. We click delete. 32.8, we'll click delete. All right, so we'll leave 50, we'll leave 0, we'll leave 50, we'll leave 61.8. So let's keep going. We'll leave 100, we'll delete 161.8, we'll delete that one. We'll see 261.8, we'll delete that one. We'll see 423.6, we'll delete that one as well. Okay, so what do we have now? We have 0, we have 50.0, we have 61.8, and then we have 100. So we click on OK. Okay, so when you click on OK now, you see all those things are gone. Now we are left with just these 4 parameters, just the way we have on TradingView now. You see, just the way we have on TradingView, that's the way we have on MT4. So you can use any one of them. Okay, so let's do something now. Whenever you see an impulse move, like we said, find an impulse move. When you see an impulse move, what you are looking for then is a pullback. What you are looking for, a pullback, then a continuation. You're looking for an impulse move, then a pullback, then a continuation. So it's something like this. So you are looking for something like this, then you look for a pullback, then a continuation. That's the idea. That's the way it is. Okay, so what you are looking for now, this pullback is where your entry is going to be, because right now you are already seeing this impulse. The impulse is a buy. The impulse is an uptrend. Okay, since the impulse is an uptrend, what you're looking for now is a pullback to continue the uptrend. You can't just see a move happening like this and you jump in. You can't jump in. You don't know where to enter in the best place. So what you want to do is you want to wait for this retracement. This retracement is where you need your Fibonacci. This Fibonacci will help you to get the exact point, the exact place where price is going to retrace to before it continues to the buy again. In this case now, that's what you're looking for. That's what you're looking for. So let's go now. God. Hello, can you hear me? Okay.
Yes, sir, we can hear you.
Okay. Sorry about that. I signed out. I thought that was Zoom. Okay. All right. Okay, so let's continue. So what we're looking for now is that retracement, right? So that's what we're going to do. So let's use our Fibonacci here right now. Let's assume that this whole area is not existent yet, and we have noticed this move, this impulse move right here. Okay, so what we are going to do now is, where is our retracement? Where is our retracement? So what we'll do is this. First and foremost, how do you draw Fibonacci correctly? Some people have an issue with, how do I draw it? Where do I draw it from? Because you can take it from top or bottom. It depends on where the direction of the market is. If the market is buying, in this case right now, you see it's an uptrend, you will pick your Fibonacci from the bottom and drag it to the top. Then if it's a sell like this one right now that came down, you will pick your Fibonacci from the top and drag it to the bottom. Let me say that again. If it's an uptrend, if the impulse movement is an uptrend, you will pick your Fibonacci from the bottom and drag it to the top. Okay? That will give you your retracement. We will do it just now, you see it. Now, if it's a downtrend and the impulse move is to the downside, what you're looking for then is you are going to pick your Fibonacci from the top and drag it to the bottom. That is what will give you your retracement points. Okay, so let's do that now. We are focusing on this move right here. This is the impulse move we are focusing on right now, this one. Okay, so let's take our Fibonacci, and then, like I said, since it's an uptrend, it's moving up, the impulse is to the upside, we are going to take our Fibonacci, and then we'll pick the Fibonacci. We'll start from this bottom here. We'll click here, and then we'll drag to the top. You see? When you drag it to the top, what happens? You will now see your retracement points. So note this, guys. Price will either come to the 50 or the 61.8. The 61.8 is the safer point than the 50. But then if you decide to enter your trade at the 50, just know that there's a possibility that price could push down to the 61.8 too. So what that means is this: when you want to enter this trade, and you can see this one now, he hit the 50 perfectly and then started continuing to buy. Continue to buy, right? So now here is how you do this if you were to trade this right now. When you draw your Fibonacci to this point, you see price coming down. It has made it starts coming down here. You pick your Fibonacci, you drag it up here, and then you wait for price to come to the 50. Now, there are times where you may want to enter the trade at 50 because sometimes price doesn't go to the 61.8. Sometimes it doesn't go to the 61.8, it reverses on the 50, just like this one now. So if you were waiting for price to get to 61.8, you might miss this trade. If you were waiting for price to get to the 61.8, you would discover that you would have missed this trade, and this was a very excellent trade. That's how many pips right here, right? That's 100, that's 200 pips. Guys, you see what I'm saying? You see what I'm saying? This is something that moves, you can use to make substantial moves, pips in the market. And especially when you do it on the 4-hour charts. This may not give you trades every day, but when it gives you trades, this may give you like a couple of trades a week. It may give you 3 trades a week, but you can see the kind of pips that you're going to be banking. If you take 2 trades in a week and you bank 200 pips, 100 pips, 100 pips on those 2 trades, that's 200 pips profits. If that's a standard lot, you know how much you're making. If that's 0.5, you know how much you're making. You are actually making money in the market. It's not by entering 10 trades, 20 trades in a day. That's not what you are looking for. You are looking for great entries that can give you substantial moves in the market. Confident moves. You may hold the trade for a whole day. You may hold the trade for 2 days. Depends on your appetite. It depends on how much pips you want to take. Depends on how much move you want to, how much of the moves you want to catch. You see now? So in this case now, if you are to enter on the 50, your stop loss is going to be below the 61.8. Below the 61.8. Now, why do I say below the 61.8? Because you know already that price will either get to the 51.8, the 50, or the 61.8. So if you enter on the 50, it is because you entered, that entry was a quick entry. It was an early entry. And the reason why you entered on that early entry is also because you don't want to miss the trade. And that's fine, it's not a problem. But you need to know where to put your stop loss. Your stop loss will now be below the 61.8 because you know that price could likely come to the 61.8 as well. So, but in this case, you see that the price just kept going up. It hit 50 and moved up. Now, you could do it in such a way that you put let's say you want to take one standard lot on your trades, right? You want to enter one standard lot on your trade. You can decide that, okay, what will happen is that let me get in on 0.5 on the 50%. If price moves up from there, okay, I'm still in profit, I'm good. Excuse me. If price comes to the 61.8, I will take another 0.5, which is the entire one lot I wanted to do, right? I split it into 2. I put one on 50, I put one on 61.8. So if price doesn't go to 61.8, at least I still took 0.5. I'm still in profit, right? So that I don't miss the trade, so that you don't miss the trade. Okay? So that's how you do. You see this move now keeps going. And then you know that when price moves like this, it's going to this next resistance. This is a resistance here. Oh no, okay. So this is a resistance here. You know that because this resistance is here, this is the place that price is likely to get to. So you know that price is going to buy, price is very likely to buy from here all the way to this point. Buy from here to here. So that's very clear to you. Now you can decide that you don't want to wait for that move to happen. You can see we measured it just now, it was a 200 pip move. You can decide you want to take profit at 50, 100, 150. That's totally up to you, right? So this is how you do it. Let me show you another one here right now. That is one move. Okay, so let's look for another impulse. I'm seeing another impulse move right here. This thing, guys, after this class, go practice it. Go practice it. I'm seeing another impulse move right here right now. This is another impulse move. That's another impulse move right there. You see, that's another move in one direction. Okay, so what do we do with this one now? Since it's still going up, how do we do it? What do we do? We're going to take our Fibonacci from bottom to top. from bottom to top. Okay, so let's do that now. This is our Fibonacci. We'll take our Fibonacci. Let's see if we are going to get a 50% or a 61.8% on this one. So we'll take our entry here and we'll draw all the way to this, to the top here, right? To the top here. So can you see something here, guys? It hit the 61.8. Let's do this. Make sure you pick the bottoms. If hit this, it went to the 50, it didn't stop at the 50. This one stopped, the first one we did stopped at 50 and reversed. This one did not stop at 50, came to the 61.8. Once he hit the 61.8, he bought. He bought from there, and look at the buy from the 61.8, or the buy is 160 pips currently. You see? So it's either it gets to the 50 or it gets to the 61.8. Whichever one it gets to, you just have it in mind that it will either get to the 50 or 61.8. If you want to wait for the 61.8, fine. If you want to wait, take it at 50 and put your stop loss below the 61.8, that's fine as well. If you want to enter at 50, enter a part of your position at 50. And then when it gets to 61.8, if it gets to 61.8, like in this case, you enter another half of the position you wanted to take, then that's fine as well. So in this case, you will have two trades running in profit. Okay, so let's pick another pair. Let's look at, let's see if we'll see anything on GBP USD. Okay, all right, so let's see if we are, I'm seeing another impulse here right now. This is an impulse move right here. This right here is an impulse move. Okay, that's an impulse move. So look at this. Look at this. This, you could have taken this. Let's look at this. You could have taken just this part alone as the impulse. Just this part alone. You could have taken it as the impulse. But the problem with it is this. It is not a complete impulse move. It's not complete in terms of Fibonacci. Look what I mean by it's not complete. Let me clear it for you so that you understand what I mean. So let's say we are taking this area now as the impulse, okay? So let's pick Fibonacci. Since it's going up, we'll pick the Fibonacci from the top to the bottom, from the bottom to the top. So when we get here, we'll put it here. So from this top to this bottom, from this bottom to this top. Did you see it didn't come to the 50 or 61.8? It didn't come to the 50 or 61.8. That tells you that that impulse is not complete yet. It's still going up. That tells you that that impulse is not yet complete. So it's not a complete impulse yet. So you're going to hold on and let it keep going first. When the impulse is complete, it will retrace to your 50 or your 61.8. So it will retrace properly. But if it doesn't retrace properly, it tells you that the move is not complete. The impulse is still going. Okay? So that's why you see now that, see, it didn't come here. Before it started going up, it didn't go to 50, it didn't get to 61.8, telling you that the impulse is still continuing. So we can't stop here. We are going to have to stretch our impulse candle now, impulse move now. We're going to have to stretch it from here all the way to this top. And then let's see what happens. Let's do that and see what happens. Okay. All right. So now let's stretch this. We're still taking this bottom. We are taking this bottom now, this bottom, and then we are taking this top. Since this one was not complete, we couldn't use this one because it was not complete. So we are taking another, we're taking the next one. Okay, so let's do it and see what we have. So let's pick our Fibonacci now. Okay, Fibonacci is already there. Let's drag it to this top. Let's drag it to this top. Okay, so when we got to the top, now look what happened here, guys. Can you see that price came, got to the 50, it went through the 50, got to the 61.8, and it reversed from the 61.8. This cannot be coincidence. It got to the 61.8, and guess what? It did not go past it. It reversed from it. Sweet, easy. And then look at what we are seeing. From here, Look at this move right here. This is 240 pips, 243 pips. Can you imagine catching 243 pips just between yesterday and today? Is that even yesterday? About so I think from yesterday to today. Can you imagine catching that number of pips? What would that do for your account? What would that do for your account, guys? Can you see what I mean? Okay, so let's go to USD. Let me pick another one. This is USD JPY. Okay, no. Yes, USD JPY, but that's one I marked. But look at this one. Look at this. Now, like I said before, we could take this one now. This is the latest impulse here we are seeing. This is an impulse move right here. Right? Let's look at this. So this is an impulse. This is an impulse move right here, right? Right here. Now this is an impulse move. But like I said, if impulse does not do 51.61.8, it is not complete. If it doesn't do 61.8, it is not complete. Okay, so what that means is that let's pick something now so we can know whether it's complete or not. So let's pick our Fibonacci. We'll focus on this area right now, and this area to start with. Let's test it and see. Okay, so let's pick our Fibonacci 2 now. We'll place it here, and then we'll drag it here. So when we drag it here, what do you see? It doesn't even come close to the 61.8, to the 50 or 61.8 at all. Doesn't even come close. All right. Now, remember, this one just happened. Don't look at this one yet. Don't look at this one yet. This one just happened. Okay. We are looking at this area, assuming this has not played out yet. You see? So we are assuming that this area does not exist yet. We are just working with this now. You see that price didn't come here. It kept going up, telling you that the Fibonacci, the impulse is not complete. The impulse is not complete, which means it's still continuing. The impulse is still continuing, right? Yes. So what we do is this. Let's do that. So now we will have to shift it. We'll have to focus on that means we'll have to shift it to probably the top here. So let's work with this bottom. Since we've already seen this move now, let's work with this bottom and this top. And since it's a buy, it's an uptrend, we will do what? We will pick the Fibonacci from the bottom to the top. Okay, so let's do that. So we'll pick Fibonacci from bottom and drag it to the top. Okay, so now when we do this, what happens? We see that price came all the way to the 61.8 here, and it seems like it's starting to buy right now. In my opinion, this thing is going to buy and keep buying up from here, at least buy to a significant area here. You see? This is 61.8. You can see price stopped there. This move happened, and then price stopped around 61.8. I'm expecting this to buy from here. I'm expecting it to buy from there, right? That's what's happening. Now let's look at something else I'm expecting from this pair. Let's look at something else I'm expecting from this pair. Okay. Now remember, guys, the best place for you to do this thing I'm showing you is on the 4-hour chart. It works for 1 hour too. It works for the 1 hour too. It works very well for 1 hour. In fact, it works for lower time, 15-30 minutes. It works. But the most reliable moves that gives you clearer picture is on the 4-hour. Sometimes the 1 hour and the 4-hour will play together. It will be the same move on the 1 hour and 4-hour to be almost the same thing. All right. So let's look at this. Within impulse moves, you can have impulse moves too. Within impulse moves, you can have impulse moves. Like in this case, let's show you something. Let me show you something. Look at another impulse move right now. This one happened yesterday. Look at this impulse move now. This is an impulse move. From this top here to this bottom here, this is another impulse move. So let's do something. Let's check it and see if we're able to get, if that gives us a 61.8 for us to enter for a sell. You see? So let's draw Let's pick our Fibonacci. Remember, in this case, I'm showing you guys this one now because we've been looking at only the buy side, Now, this is a sell side. This is a sell side. So we are focusing on this top now, and then this bottom. See? So we're focusing on this top, and this bottom here. Remember, that's what happened first. This candle, this sell that happened now is just happened today, just happened recently. Those were the ones that happened first. That was the impulse that happened that you got a retracement for. Can you see now we drew it from that top to this bottom? Can you see how this thing played into the 50, 61.8? If I went to the 61.8 and then from there it collapsed. Collapsed. Imagine, guys, we're trading this today. This is how many pips? This is 150 pips. You see that? Now, this happens over and over again, right? Then there's something else I said, which is the number 3 thing. I said, notice patterns. Notice patterns in the market. Are you looking at a head and shoulder pattern? A W pattern, an M pattern, and all those patterns? Notice it. So let me show you a pattern I see here right now on this USD JPY. Let me show you a pattern I see and how this is potentially going to play out probably tomorrow or so. Okay, now there's no guarantee. I'm just going to show you. I'm going to do the analysis for you, and then you look at it tomorrow, or if you're ready to trade it, you can trade it. Right? I'm going to show it to you right now. The patterns I see, and then the next moves that I see right now on USD JPY. So let's go. Okay, so that's the first move that happened, and this one has happened now already. Okay, good. So now, what I'm expecting now, I'm expecting that because this area right now is a 61.8 on this move, watch this now. You see this area is kind of a 61.8 around this area, though it went past it a little bit, right? It's a 61.8. What I'm expecting now is this. I'm expecting this price to buy. I'm expecting price to buy from here. I'm expecting price to buy from here to this, to somewhere here, but watch this. I will show you exactly what I think using Fibonacci as well. Now, this buy, guys, I don't trust it, so I'm not going to enter this buy because the market is telling us sell. You can see this impulse move now. This is impulse. We discussed impulse. I showed you. I said sometimes impulse can be 1 or 2 or 3 candles. Sometimes it can be 10, 20. Like in this case, this is a huge impulse. It's still an impulse, but this one now is another kind of impulse. So because I'm seeing a sell impulse here, I am personally not going to be buying it. Even though I expect this buy to go up from here, I will not buy it because the market is already entering a sell zone. So look at something. If you know what a head and shoulder is, let me describe it to you for those who don't know it very clearly. Okay, so it's a kind of pattern that gives you a head and shoulder is a pattern, is a bearish pattern. An inverted head and shoulder is a bullish pattern. Okay, I will show you a head and shoulder pattern. I will show you an inverted head and shoulder pattern right now, right? So look at this. This is a shoulder. Just imagine it, the way your head and shoulder is. This is a head. This is a shoulder. This is a left shoulder, this is a head, this is a right shoulder. So let me show you the opposite of this. So this is the opposite. Look at it here. This is a left shoulder. This is a head. This is a right shoulder. So when you see this, this is a bullish movement. This is a bullish pattern. Okay, so a head and shoulder is a head and shoulder like this one now. Head, shoulder is a bearish pattern. While an inverted head and shoulder is a bullish pattern. Can you see how this thing started buying? But here is the way it works. When you see a head and shoulder, an inverted head and shoulder like this, always notice that it is coming from somewhere. In this case, it's coming from here. Look at it. So when you see an inverted head and shoulder, also mark this place and know that price is going to form this pattern and it will buy to that same area where it came from before. And in this case, you see how it played out perfectly. Now, if I'm moving too fast and you don't understand it, just this is recorded. I'm going to send it to you. Watch it over and over again. You understand it very clearly. It's very simple, right? So now look at this. Let me delete this and show you guys what I see going forward right now. Now we are looking at these other ones in hindsight, right? Okay. So what is likely to play out in front of us? Let's look at that one. Okay. So now let's look at this. So we see a head and shoulder here, right? So we see a shoulder, left shoulder, a head, and a right shoulder. Fine. So what is it that how far are we expecting now? Notice that this shoulder, this pattern came from here. Notice that it came from here, right? Look at it. So it means that it is very, very likely that price is going to sell all the way to this area right now and eventually close here. So you see, that is what it's telling you because it's coming from here. That's where it's coming from. So that's where it's likely to come back to. All right. So now the question is, where is the trade opportunity here? This is where we're going to round off. Where is the trade opportunity here? Let me show you the trade opportunity that I see here right now. Okay. So since we are, let's remove this previous Fibonacci. Let's focus on the new one. The new pattern, the new impulse is what we are going to focus on right now. Let's focus on the new impulse. So on this new impulse right now, remember, we are going to pick a top and a bottom. And because is a bearish impulse, we are going to draw it from top to bottom. So look at this now. Remember, you pick it from the top here, and then we draw it to the bottom and you stop here. So this is the 50%. You see the 50% here. This is the 61.8. So what I'm expecting now is this, guys. Here's what I'm expecting. I already can see the pattern. I expect price to come to this area, right? I expect price to sell. I expect price to sell all the way to this area, right? But I'm expecting that I will get a trade. I'm expecting that this pattern will give me a trade that I can also enter, right? Fine. So here's what I'm expecting. I'm expecting price to do this. I'm expecting price to move to this 61.8, 50, 61.8, and then sell off to this area. This is where this is what I'm expecting to happen. So this is around where I'm going to be looking to enter a trade around the 61.8 here. I'm expecting to enter a sell that will eventually take me to this place. Okay. So this move right here from this area to this point is probably over 100 pips. That's almost 200 pips. You see, that's 200 pips. That is what I'm expecting for the next move on USD/JPY. Okay. All right. So I'm going to end the class here and I will take a few questions.